Hi guys, what's up? So today I'm going to talk about a topic which is how to analyze a company. Now, this question I have been asking to a lot of students, by the way, and all the time there's only one answer that I get from my students, or like even to the MBA grads or CFAs or people who are actually working in the financial industry. Now, whenever I ask how do you analyze a company, the patent answer that I get is, all right, so we will look at the balance sheets, or we will look at the income statement, which is the in India it's a profit and loss account, income statement or cash flow statement, or we will look at the balance sheet. Now these three predominant financial statements people tell me always that they will have a check on. I mean, that's common. So if I speak to analysts, even analysts 9 on 10 will say that okay, we will get into the financial statements first. But is this the right way to do an analysis of a company, or is this the right start to do an analysis for a company if you are an analyst, or maybe a finance manager or a business manager or whatsoever, or maybe a guy on the Wall Street? I don't think this is the right way to kind of start your analysis for a company. So let me discuss with you a different perspective, what I used to do, or what's the Wall Street guy would love to do, if they were to do the analysis of any financial statement, or for example any company. So the first thing that we should do is, the point one to do any company's analysis is the corporate governance. Not many people would go by this way, or not many people would do this, but then corporate governance is one of the most important factor that should be considered by every analyst if he or she is doing the analysis of a company. Now, what do you mean by corporate governance? So basically corporate governance includes 4 attributes, or it has 4 functions, which is, the short form is RR then CP. Okay, what is RRCP? So this is basically rules, then regulations, okay, then the control and the policies of a company. Okay, now I'm not saying that these are the only 4 aspects, but looking at a very a bird's eye view, I would say that yeah, these are the predominantly important aspects of a corporate governance. Now, what's the problem with this? The problem is 9 on 10 times, if as an analyst, if you're looking at the financials of a company, to be very honest, financials of a company are made by the company, and it's only about the numbers. All right. Now, I don't want to get into the details, by the way, but when it's a number, it's at the discretion of a company to kind of put the numbers that they want to put in. You know what I mean, right? You can read between the lines. So, as a good analyst, or as a person who is keen to understand the company, or maybe an investor, by the way, it's important that you should have a look at corporate governance. Now, let's understand what corporate governance gives you. So, apart from these 4 things, this is not the only thing that corporate governance will give you. There is a lot to do with this. So, let me give you a background. Like, according to me, what is the most important thing that corporate governance would help you to understand is the management of a company. Yes. So, the corporate governance plays a vital role to help you to understand the management of a company. Now, why it's so imperative for an analyst or for a business manager to understand the management of a company? Now, this is quite important. Why? Because let me tell you a couple of incidents that has happened globally, basically in the financial world. Let's talk about the crisis, say 2008 subprime crisis. Okay, so the subprime crisis that happened in 2008, there are a lot of people who would say that, Lehman Brothers went down because they had never followed a financial guidelines, or they did trade securities, which were quite not supposed to be valued, or which was next to impossible to value, or they got, or Lehman went under because of the toxic assets which they held on their balance sheets. So there would be n number of reasons to tell that why investment bank like Lehman Brothers, such a strong bank, people say that it's too big to fail, actually went under. Now, if you do the analysis and if you do the exact research, the reason was not the financials, but the reason was corporate governance. Yes. Now, what do you mean by corporate governance? If you ask me, the corporate governance is basically the management or the board of directors, and these are the people, or these are the guys who eventually influence your corporate governance. Okay, so definitely corporate governance is set rules and regulations, but again, the ultimate aim, or the ultimate the thing is that your BODs, your management can definitely use them for their own advantage or for the advantage of their stakeholders. So predominantly the stakeholders for the corporate governance are nothing but board of directors and the management. All right, now how it's important and why it's important that you should or you must have a look at corporate governance. What it tells you basically. Okay, so the first thing that I'm going to look at from the analyst perspective is the board of directors. Now, why? Here, I need to understand what are the board of directors, what are their connections, qualification, how old they are in the industry, what are the credentials they have. That's pretty important to understand a company, because these are the main people of the company. Okay, now, what I should be looking at as an analyst, first of all, okay, are these board of directors interrelated, or what's the connection between these guys? Let me give an example. You must have seen the movie called as Wolf of Wall Street. There is this guy, Jordan Belfort. Okay, now Jordan Belfort, when he was running Stratton Oakmont, yeah, so this is the name of the firm. So when I was running this Stratton Oakmont started getting into the IPOs, or they wanted to help companies who are willing to go to public. So they did the first IPO of a company called as Steve Madison. As you guys are aware that it's basically a shoe company. But if you look at one of the main guy from Stratton Oakmont was a close friend of the CEO or the chairman of Stratton, Steve Madison. And we know what happened eventually, how the share price was manipulated, and how much money these guys made. That's how it is. So the first thing that we need to understand is that how these guys are correlated to each other. If you look at Lehman Brothers, if you look at all the companies who went under, predominant reason was the corporate governance. If I look at Lehman Brothers board of directors, or rather if I look at the top management of Lehman Brothers, I would like to make a mention of the CEO, which is Richard Flood. We all know about him, right? So this guy had a great hold on Lehman Brothers and its management. So whatever he is to strategize, or whatever he is to aim at, the message or the strategy is to trickle down to all the other stakeholders in the management or in the middle management, which is your CFO or your COO, or for that matter your chief auditor, or for that matter your regulators, inside regulators I'm talking about. Okay, so if a person as a CEO or as a board of director has its vision or strategies trickle down to the other employees, then I think he's got a good monopoly to hold the interest of other employees in the company. And that's what exactly happened. In 2008, the subprime crisis, the biggest name, or the investment bankers like the Lehman or say Morgan, I don't have to name them, you guys are quite aware of it. But if you look at the securities like CDOs, collateralized debt obligation, mortgage-backed securities, it was not really possible to value these guys. It was next to impossible to do the valuations of CDOs and MBS, right? But still, the top-notch investment bankers, their board of directors, their CEOs went on to sell these things. Why? Because the more you sell them, the more you make what? Called as bonuses? Yeah, so the big buck. Okay, so they went on to sell these things even after knowing that this is something dangerous. And again, this was never regulated at that point in time. But whose call it was to went ahead and sell these things off in the market? Yeah, definitely it was a top management. So when you sell these things in the market to make more money, which is I would not say the main motto, but which was one of the most important strategy of the management, then you know what happened exactly. So everybody got exposed to each other, and then entire share market came down. And it not only stick to the US economy, I think then it was spread across the globe, by the way. So when I talk about corporate governance, I think it's quite vital that you need to understand who runs the company. Okay, so who runs the company? What's the purpose? How these guys are related to each other, and what's the strategy, where it's coming from, what's the internal motto, what's the internal aim of these folks who are running these big organizations. Okay, so Lehman Brothers is not the only example that I want to talk about, because there are multi examples there are so many examples you can think about. Disney. Okay, so Disney is the another example that I would love to cite out here. Okay, so what happened with Disney, guys? If you look at Disney, right? I will be uploading a video soon discussing the Disney case study, by the way. But if you look at Disney, all the guys, the board of directors and the top management, they were closely related to each other. Like they knew each other from long period of time, kind of friends of each other. So you know what happened eventually. Disney made huge losses. So Disney is one of the company that is a brilliant case of failure of corporate governance. Now, if I have to move to another company on an international level, I can talk about Lehman. We've already done with that. If I have to talk about a company which is in recent time is getting famous, I think that's Facebook. Okay, Mark Zuckerberg was in the Senate. He was addressing all the questions raised by the Senate yesterday. If you had if you had an opportunity to look at that, you know, you would definitely understand how the data control management has failed down. I mean, I'm not saying that this is the great example of a corporate governance failure, but what I'm trying to tell you guys is that, yeah, it does come from your top management. As a CEO, you got to know what's happening with the data that you possess. I mean, if you really want to get a clear understanding of this, you can go and, you know, check out the session and all the questions that Senate asked him yesterday. So yeah, so Facebook is the kind of, you know, real example, or kind of a new example that you can think about. If I have to talk about certain Indian companies, to name a few, I think I would try to make a video on Satyam. But yeah, Satyam is again the biggest failure of corporate governance, at least in India. It's a failure on the Companies Act, and it's a failure on the regulations, by the way. So if you look at Satyam, all the figures were inflated. And they were inflated by the top management. They fooled the stakeholders. They fooled the shareholders. Now, why did that happen? Because of the main aim of the board of directors to make more money. Yeah. So Satyam is basically a good example. And there are a lot of examples, by the way. So as an analyst, if I were to analyze a company, instead of getting into the financial statements of a company, which is nothing but a number driven by the micro, macro, and the strategic approach of a board of director or CEO, I would first love to understand the corporate governance of a company. And that's what I used to do. That's what I used to do. Like whenever I had an opportunity to go ahead and analyze a company, I would first of all try and understand what is the corporate governance and how strong is the corporate governance of this company. So does that mean that you have a strong corporate governance, that you will be a good performing company? Yes. At least 99% of the time. Yes, definitely. You've got a good corporate governance, you will definitely have a good result, a good financials. Okay. Now, if you look at, there are two areas, the pre-2008 economy and post-2008 economy. I'm only talking about the US economy here, by the way. So if you look at, there are two aspects. After the great, meltdown of the share market in 2008, we came up with a lot of regulations. Here. The rules like Dodd-Frank, okay, Sarbanes-Oxley, you know. So we came up with all these rules which will kind of, restrict investment bankers not to do anything which is not legally permitted or which is not regulated. Now, let me give a great example out here. I just made a mention about CDOs and the MBS securities, right? These were never, ever regulated, by the way, pre-2008 era. Yes, these guys were not regulated pre-2008 era, and you know what happened? Yeah, it was a big fuck up. Now, coming back to today's world, the current world, what do we have? We've got Facebook. Okay, now if you check the entire video, if you check his interview, if you check Mark Zuckerberg's answers, or if you check what he told to the Senate, even today, this industry, the social media industry, is not regulated. So kind of monopoly which Facebook had, and you know what's happening with the database of the global public, I would say, or all the citizens, So try and understand. Whenever there is a problem or whenever there is a loophole, I think corporate governance can play a vital role. So these securities were not related. Corporate governance, the BODs, the CEOs, they took an advantage of it. The same thing is happening in the social media field today. So as an analyst, whenever you move ahead to check any company, to analyze any company, do get into the shoe of the BODs and the CEO. Try and understand the management. Try to link the management. try to understand, what kind of a background they come from. And I think that will help you to then analyze the financial statement of a company very well. Alright guys, so that's all I have from my side to tell you. If you have any questions, if you have any suggestions, do make a comment on that, and you can definitely subscribe to my channel, that's Ketan KG on YouTube, and I will be coming up with a lot of videos of the same type. Alright, thank you so much for listening to me guys. Thank you so much.